Finally, the new car market is collapsing. We're seeing prices now have literally dropped 2% since the peak back in December of 2022. On top of it, new car transactions are up 17% since the pandemic, but remember that was shortages, so there weren't that many vehicles available. And manufacturers have upped the average incentive price up to $3,200 this month. Inventory is rising, sales are rising, but largely on the commercial sector, but number of qualified buyers are going down because banks are tightening up on the restrictions for lending money to people that are subprime borrowers. And if we pull up a chart here, we look at the last 12 years trending of the average car transaction price, we'll see the natural progression on this chart. It's naturally going up. Inflationary increases, technology, and the general enhancement of vehicles that are coming to market are getting better and more expensive as the complexity goes up. So it's natural to see this increase over time for the last 10 or 12 years. But whilst a lot of people are saying the car prices have gone absolutely ballistic, and they have, and you look at the top end of the spectrum the last few years, on this chart, you're actually seeing a huge jump in 2022, and then watch it stabilize, and it's been a very, very slow decrease month over month, year over year, and largely because the sales of full-size trucks and SUVs, while they're ever so popular, have been on the downward slide. When you're drawing the best fit line based on average inflationary numbers, we're actually not that far off of where the expected inflationary changes would have been. In other words, this overall massive increase we saw in 22 has started to level off and actually slid downwards, and now we're in a place where we're almost where we should be with standard inflationary numbers. But diving deeper into those numbers, it's still pretty clear that yes, new car prices are still slightly elevated. However, things are changing. The tides are turning. We're still in that $3,000 to $6,000 over on the average transaction price. And of course, where we know the average truck is $70,000, $80,000, $90,000. On the other flip side of the coin, we've got a lot of the smaller subcompact vehicles that are in the $20,000, $30,000, and $40,000 range, which bring down the overall average. And so I talked about inventory, and when inventory levels are climbing, that's a classic surefire way to say that the industry market has actually shifted. Now we're starting to see it is actually turning into a buyer's market. Why? Because in May of 2024, go back and compared to a year ago, May of 2023, inventory levels have risen by over 55%. And while manufacturers like Toyota, Lexus, and Honda always remain in a struggle and pickle to try to get enough inventory to the desired customers, the majority of the industry is really suffering trying to sell a lot of their products. Playing catch up, they've got a lot of new inventory, car lots are full, truck lots, SUV lots are quite full. And when you look at other brands specifically like Ram, Jeep, and as well Jaguar, Alfa Romeo, those brands, a lot of the Stellantis products in general are over doubles the day's supply. Where the average day supply is about 74 days, that's clearly where the average median and where most dealers are happy residing, because after a month or two, they're about ready to start selling those vehicles. After we're getting up to that 4, 5, 6 months, they're really starting to put the pressure on. And so we're seeing a lot of these brands like the Rams and the Jeeps with 150 days plus supply. We're into that half-year supply. Inventory means that there's strong incentives. And we've seen this. I've showed you on a lot of my videos, 18.5 to get rid of a lot of new old stock Ram Classics and a lot of other vehicles that just aren't selling all that well. We also see massive incentives for Jaguar, Land Rover, Range Rover, as well as Alfa Romeo. And I see them all the time. I get emailed all the time right here because I was on their mailing list, and now I get these obviously loyalty incentives, price incentives, discounts of $5,000, $2,500 off. But at the end of the day, it's not enough for people to absorb that. And people are still in a pickle of, yeah, $80,000 is still a lot of money to pay for a truck. And these car manufacturers just don't seem to be getting it because the cost of living crisis is kicking everybody in the backside to the point where even if they have the money, and very few people have the money to buy a new truck, a lot of people are resistant to spend it because they fear that what's coming. You know, more inflationary changes, more interest rate hikes, and as well as the instability in the government right now is enough to make people add a little pause. Maybe not go out and spend and buy that new car just yet. And on top of all of this, we said incentives are another one of those key indicators. And when we're seeing $18,500 off, even $10,000, $12,000 off, lots of incentives out there pushing people to get into the door again to buy their next car. I've even shared some of those big incentives in previous videos of mine where we're seeing a lot of the EVs are susceptible to poor sales and of course clearly are pushing incentives quite hard. As a matter of fact, we're seeing a lot of brands offering up again 0% financing, and not only on 3 years, now we're seeing it on 4, 5 and 6 years with 0% in some manufacturers. A clear indication vehicles aren't selling. This is a buyer's market and the new car sales are crashing. Now, on the other hand, what we're seeing are used car trade-ins. A lot of times people still getting rooked. They might get a great incentive on the front end, but then they go to trade in their car and they're getting hosed. Remember, don't forget two parts of that transaction. I would suggest, first of all, if you have a very popular model like a Toyota or a Honda that you know is going to sell well, I would always recommend polish it up a little bit, put it on the private market. You're guaranteed to get full dollar for it. If it's one of those less popular, easy to come by models that nobody really wants, Jaguar, Land Rover, they're very hard to sell, I would definitely shop around to different markets, definitely shop around to different dealers and get the best case, because a lot of dealers, the first one you drop in are going to hose you. And so while you may get the great deal on the new car purchase, your trade-in, you might get absolutely soaked. So make sure that you shop around in your used vehicle trade-in. And as well, one thing to consider when you're out shopping for those new vehicles, do some of your other homework, insurance costs, replacement for maintenance and parts. We know Tesla's high maintenance costs for new tires, batteries, and while you're saving on oil changes and fluid changes throughout the next 5 or 10 years, the fact remains is when it's time to pay, you're paying significant at the new car purchase experience because they're not cheap. So that's the trade-off. Make sure you do your research on your maintenance as well as your insurance costs. So according to Kelley Blue Book data, the average transaction prices remained relatively unchanged or has dropped very marginally from April to May, and now we're starting to see similar trends here in June. 48,000 and change means that it hasn't altered that much. But then you ask yourself, with all these incentives, why isn't the ATP or the average transaction price dropped at all? Well, a simple fact is a lot of models are coming out. A lot of these manufacturers are starting to ditch their cars, ditch their smaller vehicles, and they're bringing more of these big vehicles to market, EVs to market. And so these higher cost vehicles are drawing up the average. And even with the incentives, it's not enough to offset and drop it down below that number. So we're making ground, but unfortunately, a lot of the vehicles that are hitting the market are pricey, well-equipped, high-spec vehicles, pickup trucks and full-size SUVs like Escalades and BMW X5s and the like are definitely bringing and drawing up that average on top of the price of brand new trucks. But we all can't forget the sight of this. And everybody thinks, yeah, it's a rosy picture and dealers are going to say we're busier than we've ever been, but that's not entirely true. And a lot of the sales, as a matter of fact, the vast majority of sales, particularly in the truck segments, Ram, Chevy, GM, as well as Fords, a lot of them we're seeing a lot bigger increases in the commercial, lease, fleets. That's where a big increase is going, and the retail market is actually taking a back seat. So less buyers like you and I are actually out there buying these new full-size trucks, whereas more of these trucks are going more to leases and fleets and for business operations. And the statistics are also showing that while we're seeing increased incentives and vehicles at the higher price point are selling, but they're dropping down, there seems to be a bigger appetite for lower cost vehicles. CRVs, Toyota RAV4s, little Mazda CX-5s, you name it, those types of vehicles are building in overall sales. And as a result, that's actually drawing down slightly the average transaction price because people are finding it less appetizing to buy that $80,000 truck when all they really need is that $40,000 SUV that can get them around and take the kids and the family to school. That's all you really need. And this is what we're starting to see. And if you're walking down the lots like I often do, then you're probably realizing that there's certain manufacturers that have a lot of inventory and others that don't. What I've typically found is the Toyotas, Lexus vehicles, usually they're just drop in and then off to the customer. There's very few actually sitting on the lot brand new waiting for the buyers. Yes, they're out there, but the lots are fairly empty for Toyota as well as Lexus. Honda, same storyline. But yet, Alfa, Jaguar, Range Rover, Land Rover, all those products, as well as the Stellantis Jeep products, as well as Dodge and Ram vehicles are brutally selling. As a matter of fact, Dodge is sitting on about 48% older inventory. That's right, half of their inventory is older generational vehicles that are basically obsolete. 2023s, 22s, 21s, brand new old stock. Half of their inventory is old stuff that has not sold. So that might represent a great opportunity for you, but don't go too old. Watch out for that lot rot. It's going to catch up. Remember, weakened batteries, cracked tires, sun fading, fluids that haven't been changed. There's a lot of negatives to buying an older new stock vehicle, but if your price is right, it might be worth a look. And while brands like Ram might offer some great deals, I'd always be asking for 6, 7, maybe 8% off of invoice sticker price, because there's always a holdback somewhere. There's always a certain level that the manufacturer may be willing to offer the dealers directly to incentivize the dealer's sale of that vehicle. So MSRP is what you see. Invoice is what we should see and you should be digging for, and you should be asking for a few percent off of invoice even. They're going to say, they might even try to laugh you out of it, say, look, I know better than that. You should be definitely negotiating off of invoice pricing to get your best deal. Even with Ram trying to offer up a couple $1,000s loyalty fees on 24s, we're pretty much out of 24. The 25s are on the lot now. Why would you want to pay top dollar for 24 model year now, unless you want that V8 engine for Ram? Ford Explorer is one of the other poor sellers in the SUV segment. And so those might be a great couple of options if you're looking for something that just need to get around. But interestingly enough, with all of these incentives, and we're seeing incentives rise, they've gone up to $3,200 of average, about $100 per transaction that's been incentivized. There are still a few dealers out there trying to play the old games. Don't get caught up like that. That is absolutely brutal in a cost of living crisis like we are today, in a place where high interest rates, high inflation. Why would anybody even consider paying $1 more than invoice? Forget about over MSRP. Here, I'll share a couple of examples. The 2024 Cadillac Escalade Sport Platinum, the base MSRP, which you should never really pay that anyway. That's even probably higher. Again, as I've said, you should be looking more at invoice pricing and try to negotiate off of that. But base MSRP of this vehicle is $120,085. And then they come along, have the gall to go and throw another $20,000 on a dealership adjustment markup. I can't believe. What are these people thinking, man? Wake up. Anyway, I'm here to help you guys. Like, honestly, think about this for a second. Why would you pay more for a vehicle than even what the manufacturer is just saying that this vehicle is actually worth? But anyway, they're trying to do that and hit you with a price of 140 grand and 85. Okay, Exhibit A. Poor example. And I have another one here. Here's another invoice snapshot at a BMW X5 dealership. This one absolutely blows my mind. Take a look here. We've got an X5. MSRP of this vehicle is $82,345. Okay, pricey enough as it is, but it's a BMW, you're going to expect that. Then they go and add a $5,000 market adjustment fee. This is right now. This is a 2025 model year X5. How could you possibly be even trying to do this? Try to go down that road and host customers this way. But anyway, I mean, for those people that are uneducated, walking around with horse blinders, hey, if you watch the channel, I'm gonna try to lead you down the right path here. So clearly, this is not the purchase I would make. I would be still drilling in to the invoice pricing. Forget about this MSRP crap. Forget about the $5,000 market adjustment fee. And a lot of people were doing that, remember? And worse yet, because a BMW is really susceptible for high depreciation. Nothing worse than getting in with a market adjustment fee on top of MSRP on one of the worst depreciating vehicles. You will definitely be underwater, and negative equity will crush you to oblivion in 2 or 3 years of ownership of this vehicle. So get yourself out of that. Try to get tightened up as much as you can out of the hole so you can minimize the amount of negative equity. But then they go and add this absolutely ludicrous total value package 2, where it's nothing more than a few auto spa, 1 year complimentary car washes, concierge service, which should be free at a BMW dealership anyway. They usually give you free coffee and water. Ceramic tint window film. Okay, it's a film. That probably costs you $100 to install. Enhanced windshield protection. Same thing. All they're going to do is possibly give you free glass, maybe 3 free windshields in the course of 3 or 5 years. Most people don't even bother taking them up on that. And they're charging $2,500 for this. I absolutely mind-boggling to me. Paint protection film, another one. $3 grand for the PPF. The Elite package, the Valor film, ceramic built-in, great. Full hood, full fenders, mirrors, front bumper. I'll tell you right now, locally, Canadian dollars, which is, you can get it even better, I can get the full hood, full front end, what they're talking about, PPF right there. I can get Expel, which is one of the best products, self-healing film that you can get on the market today. I go down to one of my favorite dealers here, and they actually hook me up. I do a full front end of this vehicle, and I can get it for about $1,000, and that's Canadian. Maybe $1,100 Canadian funds. US, it's probably $600-700. So why would you spend $3,000 on PPF? Forget about it. Tell them to wipe all those three right off the top. You've got the 5, you've got the 25, and the 3. Now you're 8. You're at like over $10,000 here on fluff. Literal fluff. So again, caution word to the wise, everybody. Be sure to do your shopping around, watch the channel, and I'm going to share all those ins and outs because you don't want to get rooked in this. But at the end of the day, yes, we're evolving. The new car vehicle market is crashing. It's tumbling. Big incentives, big inventory, big pushes for most manufacturers other than a couple of these greasy ones. Most dealers are willing to talk and negotiate right now. On top of it, we're at the end of the month. And then don't forget the year end is going to be the ultimate. So if you really can wait, I would advise and suggest strongly that you wait to the end of the year. That's when you're going to get your best deals, 100%. And since we already mentioned how poorly selling Jeeps and Dodge and Ram Stellantis are, definitely check out that because the CEO tells the whole story of how he plans to fix it. Hope to see each and every one on the next one. We'll see you real soon. Bye-bye.